Hello, and welcome to another update video about ADA. As you know, because of the break, even though it was just a very brief and minor break above this 38-cent level, we are watching generally for higher prices here in a diagonal pattern that is not necessarily overall bullish on the ADA chart. I explained to you that there are different patterns that could unfold here. For example, this is the price action that you can see here of the December lows. Disregard that I'm counting the bear market as complete here. That is not necessarily the case. We're at the moment just following the short-term trend. The next decent setup I think that could occur here would be a pullback in wave B, which could result in a C wave rally. If the pullback is corrective, then this would be a decent entry point for a rally in wave C. Remember that B waves can be very shallow, so we have to be on our toes here. This would still not be a very high quality setup, okay? It's just something that I'm observing in case we get that pullback. The idea is that due to the invalidation of the triangle, I discussed that in yesterday's video, the next best option here to track really a pattern is a diagonal. So that this could form here a 1, a 2, a 3, a 4, and a 5. So I'm watching for this pattern to evolve. This could be indeed a leading diagonal in a wave 1, which could result in a pullback in a wave 2, which could again result in a rally in a third wave. Fine. However, this would be also possible within a bearish pattern, because due to this move down here that happened on the 11th of June, I don't have a clear bottoming structure. Why? Well, the last rally down, the last breakdown was just in 3 waves. We ideally need to see 5 waves down as the last wave. Because it's a 3-wave move down, it can always count as an overshooting B wave to the downside, which would imply bearishness. Why? Because if this here was a 3rd wave, then this here could simply have been an A wave in 3 waves, which often is followed by a very strong B wave. And then this could be a diagonal, yes, which could unfold in 5 waves, yes, but it could just be an ending diagonal in wave C. So just that you understand the context, there's nothing more important than context in Elliott wave. So just by watching for 5 waves up doesn't mean we have really bottomed in the bear market. It simply means that, hey, we have a chance. So after the 5 waves, we need 3 waves down. If we get 5, then, if it doesn't stop basically in support. So after the 5 waves, we will expect a move down either way. And then we have to watch a certain support level. And if that support level breaks, then we know, okay, we probably head down to 15 to 20 cents. That will depend a little bit on how high we actually go. I mean, that's an option, okay? It's also still an option that a triangle is indeed unfolding, but it would have to be a very extended triangle. Now with a break above 38 cents, A wave, B wave, C wave, D wave, E wave, and then down. A triangle is possible because we have 3 waves up, 3 waves down, 3 waves up. But this is obviously now a higher high compared to the previous one. Therefore, I have to move the waves along, okay? Either way, let me just clarify that at the moment it's too early to say if really we have bottomed in the bear market already. Yeah, it's too early to say, but we are tracking a bullish scenario until it breaks, okay? So at the moment, I think it's just wise to understand that the bull market could have started and we just need more evidence. So what we're doing at the moment is to track here this 3rd wave to the upside. A 3rd wave, it would have to be a diagonal. It can't be an impulse. So it can't be an impulse because this wave 1 is clearly just a 3-wave move. A wave up, B wave as a triangle, C wave up. So if we measure that, length of wave 1, go to the low of the wave 2, then the 3rd wave, would normally need to reach 40.8 cents as an absolute minimum. So it could be that with a move to 40.8 cents, the 3rd wave is already in. Maybe if we get one more high. But the most likely scenario would normally be the area around the 1.236 extension to the 1.38. That's at least common. If the situation is quite bullish, then sometimes even the 1.618. So we talk about 46 to 57 cents as, you could say, ideal range for a 3rd wave in a diagonal. And we're about to finish an A wave, so I'm watching for a B wave pullback. Sometimes they just do this in one go, okay? But if we get a nice B wave pullback, a corrective pullback, then this could set us up for a C wave rally towards 57 cents. And I think we have a chance that maybe we get one more extension higher, maybe to 40.8 cents, and then we get a pullback in wave B. So what I will do, if I see this trend channel break and a more sustainable breakdown, then I will add a support area. It's a bit too early for that at the moment, okay? If we look at the microstructure, it seems to me that we are obviously in this C wave, yeah, and the C wave would be a 5-wave move, and possible that we finished a 1, a 2, a 3. This could still be a wave 4 unfolding. It might even turn into a running triangle, which consists of an A wave, a B wave, a C wave, a D wave, and an E wave, and then we could get one more high. I gave you a level for that, and then I will be watching for a more substantial top in place, possibly. So I will certainly track for a B wave pullback. I will mention the support area. It's just too early to really put it onto the chart. Okay, so roughly we should expect it to move in. So sometimes they are shallow. So roughly 31.9 cents to 26.2. That would be the ideal pullback zone for a B wave pullback. B waves, that's the problem. They can be very shallow. We've seen over recent weeks very, very shallow B waves across the crypto markets. They can also overshoot to the downside. So I can really only, until I have a clear subwave structure in this B wave, I can really give you only sort of some orientation and the general standard Fibonacci supports for a B wave. It's not going to be very, very precise. So just be aware of that. The B waves are the most difficult waves to trade because they are the corrective waves within corrections or within diagonals. But basically, if this is an ABC structure, then the B wave is correcting the A wave. So yeah, they are the corrective waves within corrections, and B waves can unfold in various ways. So yeah, that's my update about ADA. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure you follow us on Instagram and Twitter. You can find the links in the video description. And yeah, if you're interested in the membership, on Sunday, we've got the next member live stream. You also get access to Discord and Telegram and TradingView live charts, and as a gold member, 2 additional short-term market updates. Thanks a lot for watching. Bye-bye.